So if you're deep within the CEO.CA community, you'll know my next guest, as we've seen him pretty often this year. We're welcoming back in Evan Gappelberg, CEO here. Evan, welcome back.
Thanks. Great to be back with you again.
So Nextech, right? Like I mentioned, you've been pretty regularly updating the markets with some news. Most recently, news that you're acquiring Krafty Labs for $600,000 for a company that's doing $1.1 million in revenue with margins that are up north of 70%. What made this deal so attractively priced for you? Why did it make sense?
So great questions. Again, we do try to communicate with our shareholders and potential new investors on a regular basis. We feel like they deserve a significant amount of communication, and you can't just figure it all out through press releases. That's why we do these interviews. That's why I'm always on your show. So, the way we look at this Krafty Labs acquisition is, quite frankly, the game just changed for Nextech. And the reason is that we're now entering scale mode. When you look at Nextech and you look at what's happening today, right now, it really is nothing short of transformational. We did sign a definitive agreement to acquire Krafty Labs for $600,000. That's the headline news. We also announced that they generated roughly $1.1 million in 2025 revenue at a 72% gross margin. But the main event for us is their client base. Their client base is Google, Meta, Microsoft, Netflix, Oracle, Cisco, Dropbox, Spotify. All these names are dream customers for small cap companies. And in this one acquisition, we now have these dream customers. And that's a transformational thing for a company like Nextech. With this acquisition, we're now positioned for scale, for enterprise expansion, and for potentially explosive triple-digit revenue growth in 2026.
What made it possible for you to acquire this company with such, outstanding clients?
So the guy who founded this company founded it in 2017. He's basically bootstrapped the business. There's no outside funders, no outside investors, and he's not public. He's a private company. It's a very tough road to travel down as an individual sole proprietor. And so he's done a great job of landing these accounts, but now he realizes he needs a bigger organization if he's going to expand and go from doing $1 million to 10 million to 20 million. And that's really the goal. So the average customer, even though they have $1 trillion market caps, they're only spending like $2,000 with Krafty. And so, it's shockingly low for enterprise budgets, which means on the other side of the coin that the upside is massive. And that's where we come in, is that we're bringing our full AI event solution platform, which Krafty does not have. And that allows us to sell, to upsell, to cross-sell. And that allows us to turn a $2,000 spend into a $20,000 or even a $200,000 spend. And, this is not hypothetical. This is not theoretical. This is pure expansion potential. We don't need more customers at this point. Quite frankly, we just need to simply monetize the ones we have now, and we have a lot of them.
I mean, look, for the past few months, we've been talking about this, so it's great to see it in action at this point. But talk to us about, you said you're, 2,000 spend to up to 20,000 spend. What will these clients, see valuable in what you offer? Why would they pay more for what you're going to be doing for them?
Yeah, it's a great question. It's simply answered by the fact that we have a portfolio of event solution. We have essentially an AI event operating system that we currently sell to, over 500 customers. We currently put on over 1,000 events a year where if you're putting on an event and you want a ticketing company, a badging company, a company that has an app, a company that has floor plan software that allows you to create the floor plan in 3D and populate that floor plan with the exhibitor booths and then have those booths sold on that same platform. I mean, we have that complete end-to-end one-stop shop for event organizers. And so when it comes to selling big brands like Oracle, like Netflix, like Meta, like Google, we're going to be selling our full tech stack to them, and that's where that 20,000 to 200,000 comes in. Some of these companies spend $1 million a year on events, and so we're looking at multi-department deals, tiered enterprise subscriptions, annual programs, not one-off sales, and AI automation improving the margin as we scale. This is how $2,000 customers become $200,000 customers. This is how revenue can compound rapidly, and this is how companies break out.
hmm Well, the deal closes in January, so this hits your financials for 2026 immediately. How should your investors model the combined company? What does the revenue margin profile look like going forward?
Yeah. So if you think about Nextech, think about 1,000+ customers. Think about Fortune 500 access at scale. Our current business is 90+ margins. We're bringing in this new business, which has a 72% margin, but we're going to upsell them our 90% margin software. And so as we look into 2026, we see triple digit growth through these acquisitions happening. We expect to do significantly more revenue than I think Wall Street's giving us credit for in 2026 and beyond. And a lot of these customers are actually going to be repeat customers where the business that we're doing in 2025 gets repeated again in 2026, and then you add new customers on top of that. We haven't even spoken about the fact that, sure, we have 1,000 customers with this acquisition that we're going to be selling to and upselling to, but we also have a lead gen machine that's generating about 100 leads a month, new business just coming in through SEO, and that's an average ticket of anywhere from $10,000 to $50,000. If you think about those numbers, we're talking about $1 million a month in new potential business. And so if you just close, 10, 20% of that, that's another 100, 200,000 a month. That's another couple of 100,000, which turns into millions over the course of a year. And so, this is really where the moment where the small becomes big, where, Nextech is a small company, but we're transforming. And we're transforming into a company that is going to be scaling. We're, not talking about potential. We're talking about execution. And, as this month closes out and as 2026 starts to roll in, I become, very, very excited about a breakout year in 2026. And that's really what we're building towards, is something very powerful, something built for scale, and something that I believe has the potential to become a category leader in AI event technology, not just in North America, but actually globally.
Well, I want to encourage our audience to look back on our channel on the CEO.CA website /NTAR to see the number of conversations between Evan, you and I, because there have been proof points, right, that we've actually been able to cover and see. So really good to see that over the past few months.
Yeah, one last, thing. I just want
hmm
to speak to our shareholders directly. I want to thank them for staying with us. It's been a bit of a roller coaster, but, thank you for believing in the mission. Thank you for recognizing that, the real value comes from vision, comes from also execution, and probably most importantly, timing. And, the timing is now. The next phase really is about growth. It's about acceleration. It's about capturing this opportunity that's in front of us. And we really are just getting started. So I do look forward to coming back on this show again in 2026 and updating our shareholders again, because 2026 is going to be a big year.
Yeah, you have to be here. We'll hold you to it. All right, Evan, we'll see you next time.
Thank you.
Like mentioned, guys, it's NTAR on CEO.CA and, of course, on the exchange. Everything is below for you to do your own homework. Thanks for watching.